Greetings, everybody. Happy Friday. Welcome to the Liberty Call. Today is Friday, January 19th, 2024. Hope everybody's having a fantastical day out there. It is, it's starting to get dark here in Colorado. I'm a couple hours late, but it was a beautiful day here. Lots of sun and still was cold. It was like 25 degrees. Went up into town earlier because today is my wife's birthday. Not going to say how old she is, but she's 3 years older than me, and I'm going to be 50 next month. So do a little math. So let me bring over a picture here so everyone can see my lovely wife. There she is right there next to me. This was a couple years ago when my beard was just out of control. So happy birthday to her. And anyways, let's move that back out of the way because y'all don't care about that. All righty. So again, happy Friday. Hope everyone's having a good day. So like I said, I'm a little late. My wife flew back into town today and I decided to meet her up and go do, we're doing some remodeling up in our dining room. So we went to IKEA, her favorite place, and then took her to a late lunch, early dinner. So anyways, if it is your first time watching Liberty Call, I'm glad you are here. Yes, you in the brown shirt. I see you right there. If you could do me a favor, hit the subscribe button, give me some thumbs up, like, share, subscribes, follows, all that good stuff. Press the notification bell because occasionally I say something smart. Not every day. You have to kind of pick and, you have to kind of, sort through the trash to get the little nuggets of things that I bring up. So, all right, let's go ahead and get into today's numbers. Dow Jones was up 395 points, 1.05%. SP 500 was up 1.23%, closed at 48.39. NASDAQ was up 1.7%, closed at 15,310. The Dow closed at 37,863. I'm sorry, I think I forgot to say that. The VIX was down 5.87% today. It's at 1330 right now. Canada was up 0.72. Brazil was up 0.25%, and Mexico is up 1.36. Over in Europe, Germany was flat, down 0.07. The UK up 0.04. France down 0.4. Let's see here. Netherlands up 0.09, Spain down 0.22, Italy down 0.22 also, Switzerland down 0.32, and Portugal down 0.14. Russian exchanges were split today. The MOEX down 0.39, the RTSI up 0.45. And the Asian markets, the Nikkei in Japan was up 1.42%, Australia up 1.02%, New Zealand up 0.59%. In China, the Shanghai was down 0.47. The Shenzhen Component down 0.68. China A50 up 0.35. DJ Shanghai down 0.43. Hang Seng down 0.54. And the Taiwan weighted up 0.38% for the day. All right, so that's everything there. Let's bring up the weekly chart and take a look and see how things did this week. All righty. Started down with the Dow Jones. Looks like it's going to be up for the week about 0.94%. The S&P 500 is going to finish up 1.32. NASDAQ is going to finish in the green up 2.68. So far, that's the best. Dow Transports up 1.06. And the Dow Utilities is going to finish down 3.36%. So that's the one in the red of the major indexes for the week. And the NASDAQ was the big winner. All right. So that is everything as far as markets and everything else. All right. Well, let's go ahead and get to the economic data that came out this week. Starting out with jobless claims. Initial claims came in at 187,000. Forecast was 207. Last week's number was 203,000. Continuing claims came in at 1.806 million. Forecast was 1.845, so about 39,000 better than forecast. Last week's number was 1.832 million. All right. The New York Empire State Manufacturing Index came in at a negative 43.7. The forecast was a negative 5, so a bit off here. So I believe with this one, anything below zero shows worsening conditions. Anything in positive is improving conditions. All right. Retail sales year over year grew at 5.59% this over the last 12 months. Previous number was 3.97, and on a month-on-month number, it grew by 0.6. The forecast was 0.4. Last month's number was a 0.3. Industrial production year over year grew by 0.98%. Last month's number was a contraction of 0.62. Housing starts came in at 1.46 million if you annualized it. A forecast was 1.426, so a little bit above forecast. Last month's number was 1.525 million, so down from last month's number. And on a month-by-month basis, it contracted by 4.3%. Last month's number grew by 10.8%. And existing home sales came in at 3.78 million. The forecast was 3.82, so just a bit under forecast. But you can see down here the trend has been going down since when was that? March of last year. So it ticked up from February to March and then has been down, 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 down. So we're basically back to levels we were last February or in January. So we'll see if we get a tick up again this year. I doubt it unless rates significantly change. And existing home sales month over month contracted by 1%. The forecast was a 0.3% growth. Last month's number was a 0.8%. All right. Well, that is all the economic data for the week. Let's go ahead and move over to the market recap. S&P 500 rallies to record high as tech reigns supreme. Markets were in a good mood today. All right, the S&P 500 reached a new all-time high, closing at 4839.81, driven by a surge in big tech stocks. Apple, Google, and Microsoft and Meta led the gains as investors continued to show confidence in mega cap tech stocks, anticipating sustained growth fueled by increasing demand for artificial intelligence. UBS expressed a preference for the U.S. information technology sector, citing its above-average quality and potential benefits from the rebound in end market demand. Chip stocks also contributed to the market's positive momentum, with NVIDIA Corporation and AMD posting notable gains, while Supermicro Computer Inc. reached a record high after revising its full-year outlook on the back of strong AI-led demand. The University of Michigan's preliminary consumer sentiment index for January surpassed expectations, reaching 78.8, the highest since July of 2021. Additionally, 1- and 5-year inflation expectations eased to 2.9% and 2.8% respectively, contributing to the positive sentiment. Easing inflation expectations helped cap Treasury yields, with the 10-year and 2-year yields pulling back. In the corporate sector, Macy's stock declined 1.6% as reports indicated the department store chain is planning job cuts and store closures to streamline operations. God, I can't remember the last time I was in a Macy's. It's probably been a decade or more. I mean, I can't remember the last time I went to the mall. I mean, probably the Cheesecake Factory at the local mall that we go to, and I don't even know if I even walked into the mall. I just went in and had lunch or dinner. All right, where were we? On the other hand, Wayfair Inc. saw its stock surge over 10% after announcing a 13% reduction in its workforce as part of a business revamp. Spirit Airlines experienced a notable uptick, jumping over 17% following an optimistic outlook on fourth quarter revenue due to increased holiday-driven travel demand. Energy stocks struggled to gain traction as oil prices fluctuated and settled lower, despite earlier gains driven by positive forecasts from the International Energy Agency and OPEC. Geopolitical tensions and disruptions in the U.S. oil production caused by a winter storm. Overall, the upbeat reading on the economy and consumer sentiment, coupled with the eased inflation expectations, contributed to the bullish market sentiment today. Well, today, like I said, things were in a good mood. There's always next week. And one last article here to wrap up the week. This comes from our friends over at Mises Wire. It's titled, "Does Government Spending and Money Expansion Create New Wealth or Destroy It?" This was written by Frank Shostak. So let me get my summary up here of what he had to say. All right. The traditional economic view posits that increases in total demand drive economic growth, assuming that overall output rises in proportion to increased expenditures by government, consumers, and businesses. This perspective supports the belief that fiscal and monetary stimulus can prevent a recession by strengthening total demand. However, an alternative view suggests that production precedes consumption, and an increase in the production of goods and services leads to a subsequent rise in demand. This counters the notion that demand creates supply. Got to have supply first to actually have demand. In a market economy, producers don't solely produce for personal consumption. Some of their production is meant for exchange with others. Production precedes consumption, emphasizing that in the market economy, something is exchanged for something else. The ability to demand goods is constrained by by an individual's capacity to produce them. The more goods one can produce, the more goods can be demanded. The expansion and enhancement of the production structure are crucial for increasing the supply of goods and services in line with growing demand. The expansion depends on augmenting the pool of real savings composed of consumer goods and supporting those involved in producing necessary goods and services. Government, which does not generate wealth, weakens the wealth generating process when it increases spending by taxing wealth generators. An increase in government outlays and monetary pumping can only appear successful if the pool of real savings is large enough to fund it. However, if the pool of real savings declines, loose fiscal and monetary policies hinder economic activity, as wealth generators have few resources for production. Ultimately, such policies don't stimulate growth, but lead to a weakening of growth generation of the growth generation process. In scene. So I totally agree with that because the government, all they do is take from everybody else, and then we have less money to, expand business, invest in business, or whatever the case may be. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.